Have you ever been a little nervous that you're actually making the right investment choices before taking the plunge? Or you think you have all the information that you need to be able to make that decision, but you still feel a bit nervous anyway? That nervousness lingers, but in the keenness to just get ahead, press on, get your money working for you, you have a bit of faith, and you just make that decision anyway, and you move forward. Well, this really reflects some of the questions that I've asked myself over my investment journey. And unfortunately, I've actually found out the hard way about some of those things. The hard way is the costly way, of course, and about some of those investment decisions that I made. And in hindsight, I didn't know what I didn't know, which is really quite a dangerous position to be in. Anyway, just introducing myself, I'm Michael Sgarbossa. I'm a personal finance enthusiast. I've been researching around personal finance as a hobby for over 20 years, alongside my career in railway construction and engineering. So that doesn't, I'm not a financial advisor. I just want to make that clear to everyone. I'm really, because I've done so much research on this topic around personal finance, I'm here as a resource for you guys to be able to share what I've learned over the years, share some of the mistakes that I've made to help you along the path to not make those mistakes, and hopefully help you to get your money working harder for you and your family in low risk options. So that's why I created this community, Save, Invest, and Grow Your Money, to help you guys down this path so you don't make the same mistakes I made. So once again, I'm not a financial advisor, so this is all me sharing what I've learned. You should always go and get your own professional advice when investing money. So just getting back to the subject at hand, and one of the things I'm really going to talk about today, just to help you along your path, is share some of the not so smart money decisions that I've made over the years that turned out to be bad investments. So one of the best things you can do is learn from other people's experience. Why? Because learning from other people's experience doesn't cost you a lot of money. Learning from your own experience and making some costly mistakes can cost you an absolute bomb. And unfortunately, I've learnt the hard way with a few of my investments over the years. And I know many other people have done that as well. So I'm here to try and help you along that path. Like I said, to not make the same mistakes I did, or maybe to stop you going down a path where you actually think you're making the right decision as well. So with some of these investment decisions, now that I know what I know, I would have never have made those decisions in the first place. So this is the classic case of, not knowing, you don't know what you don't know. And it's hard, right? It's really hard about making these smart investment decisions at times, because you're on a path of learning. It's an area that you don't have experience in. You're talking to people who seem to have experience in this area, and particularly, salesmen around these types of investments, and they're very, very good at articulating what the upside is, what the potential opportunity is, but they're not so transparent at times, articulating what the downside or the risk can be. Now, you need to be fully awake to what the risk is, okay? Because and it's interesting, right? Because there's so much advice out there, so it can be pretty confusing, and you can get all of these options in front of you, and they all look great. So how do you know which is the best option to take for you? So I'm just going to share a slide with you here to talk around some of the investments that I've made in the past that I wish I never did, and I had my time again, I never would have without more information. And I'll just get that slide up on screen. Here we go. Yeah, so like I said, you've just got to be aware of people when they're selling you these types of investments. None of us want to be the sucker, so to speak. I think in hindsight, maybe I have become the sucker on a couple of these investments, but hey, we're all just trying hard to get ahead, making the decisions we feel are the right decisions for us, for putting our money at use. So what I've really learned over the years is to really understand the risk of investments. So understand the risk first, and then understand the opportunity second. Because if you understand the risk first and understand what the chances are you of losing your investment compared to the upside, then that will help you make the decision to maybe not go down that path at all. Okay, the upside can be very enticing, and you can easily get very starry-eyed about the upside. There's some really high-yielding investments that get advertised out there, but anything that has high return comes with it high risk. And that's a really good general rule of thumb to think about. So, it's the classic case. Is it too good to be true? Well, in a lot of cases, yeah, it usually is too good to be true. but you need to understand the risks around those investments and how to manage those particular risks. Now, the thing about wealthy people, right, is wealthy people are very good at not losing their money. And why is that? Well, they understand the risks of what they are going to undertake, but they also understand um, investing their money in a low risk options as well. So there's no point going down a path of fantastic returns if over time, and of course, if it's high risk, the more time you're invested, the higher the chance are of that being a problem for you, and for your returns to maybe end up going to nothing. So what wealthy people do is they go, okay, what's the risk? They look for low risk investments because that limits the downside. That virtually eliminates your money going to zero. That's what you're looking for, and having more consistent, longer returns over a long period of time. So the older I've gotten, I've now realized how much more money I could have had if I invested wisely. Okay. But unfortunately, the one thing that you can't get back is time. And time is your key ally when it comes to investing. Time is the key thing above everything else. So, what you want is a low risk investment over a long period of time because that gives you compound growth. That gives you the best opportunity to link into that exponential growth many years down the track. Okay. So, what are some of the not so smart things I've invested in? So I've had the slide up here for a little bit. You've probably already read them, and I'm just going to quickly run through and share a brief story around each one of these things that has become a problem for me over the years. Okay, so um, initially when I started on my investment journey, not long out of uni, the first thing you think about is investing in individual shares in companies. So we invested in some individual shares over the years. Some of them did okay, some of them didn't do so great. Um, some of them were, well, in particular, one particular investment was a hot tip from someone that we knew was very experienced in the share trading market. Um, Always had a high level of success. This is a person who never shared their tips because they didn't want to be responsible for other people's investing. And this was the one time that they did. Turned out over a number of years that company actually tanked and went to zero. And that was one where I really learned the hard way about investing my money. So individual shares, hot tips, be wary of them. I know if individual shares, you can go and invest in blue chip companies. So, that's like the big banks or massive miners that are obviously, top performers in the stock market. We're talking ASX, Australian Stock Exchange, top 20 or top 50. There's plenty of blue chip stocks in there you can invest in individually. The other things that we've done over the years, trying to work out how we can get our money working harder for us. I went and did some share trading seminars. They with share trading, there's plenty of advertisement about how much money you can make and how great it is. The thing that I went and did those courses, the thing that I very quickly learned that there wasn't actually a lot of people who made a lot of money in share trading. It's hard to do. We did that for a while, invested in individual shares, invested in options. Really, really difficult. We actually got some really good wins, but managing the downside is key. It just took a couple of big hits that wiped out all the gains that we had, and I struggle with that personally. It didn't really match with my personality, and you've really got to be an expert in your field in doing these types of investments. Okay, what else is out there? I did invest in some high yielding hedge funds at one point in time. So they can be pretty risky areas to invest. The fortunate thing is, I've probably learned a few things along the way before I went into this particular investment. I put some money in, it performed well. A few months later, I put a bit more in, it continued to perform really well. I think maybe 7 or 8 months down the track, I took all that money off the table that I put in initially, just in case it all blew up and went to pot, so to speak. Fortunate thing that I actually did that and I took the money off the table that I put into that investment, because that's exactly what happened. That actually crashed and burned that particular investment. So I didn't lose anything, but I didn't gain anything either. So, but I guess the key thing I lost there was time in the market on a low risk, long term, consistent investment. So, what's common about all these things that I just spoke about? What what I say is common about these things is that all elements of active investing. So, what's active investing? Active investing means that you're in there actively analyzing the shares, analyzing the companies, analyzing all the fundamentals around those companies. Maybe you're looking at charting patterns or that sort of thing in the stock market. You're in and out on a regular basis. It could be days, weeks, months. Um, yeah, so you're in and out of the market. It's really an expert area, and to be honest, if you're going to be doing active investing, you need to become an expert, right? There are people who do this full time as a job, and they still struggle. Okay, so and what I mean about becoming an expert, well, they say to become an expert, you've got to spend 10,000 hours at something to really become an expert and really be successful. So what's 10,000 hours? Well, on a 40-hour working week, that's 250 weeks, or almost 5 years of full-time commitment. That's a lot of effort. Okay, so now I'm not saying don't go and do this. You may be really keenly interested in it. You may do incredibly well at it. It may fit well with your personality, this type of thing. But you've got to remember, you've got to put the commitment in, become an expert to be able to pull off in that active investing successfully. I truly believe that. Now, I'm guessing the answer for most people is you don't have time to do this. The answer is no. You don't want to become an expert in this area. We're all as busy as heck. We don't have the time to be active investors. And to be honest, active investing is damn risky. It is really risky. What we all really want is just to invest our money with as little effort as possible, to know that it's going to be generally pretty safe and low risk and just growing for us. And that's what most of us want to do. And to be able to achieve that, we need to go down a path of passive investing. And I'll just move to my next slide. Hang on. So adopt a passive investing strategy. So this is basically a set and forget strategy. Okay, so you still got to keep an eye on things just out of interest, but you don't need to be in there or out of there. You put your money in, you set it, that's it. Just leave it grow year after year. Now, in my opinion, the simplest, easiest, low risk passive investment strategy that you can employ, you can just decide on, is investing in index funds. Now, if you're a novice investor, if you're just starting your investment journey, you don't really have money invested anywhere else, index funds is a great place to start. And I highly recommend that's a place that you go start investing in index funds. So what's an index fund? It's basically a broad collection of shares across the stock market, could be in particular sectors, but generally across the stock market. It's there to replicate the performance of the stock market, and it basically mirrors the stock market. Okay, so you've got a whole massive, big, wide, diversified portfolio of companies within the index fund that you're investing in. So the great thing about that is what's the risk? It's very low risk. Okay, so if you're investing in individual companies, particularly if they're not blue chip, you're taking a hot tip, or looking at penny stocks or whatever, and thinking that they might shoot to the moon or something like that. That's not where you're going to get index funds. Okay, and if there are some of those companies in the index fund, they can go to zero and you won't even notice it. It'll be a blip on the radar because you're diversified across many companies, and in particular diversified across a whole bunch of blue chip companies, which is even better. Why buy one when you can buy heaps and be able to level the risk out, which is a really important and smart investment strategy. Okay, so yes, index funds, they are low cost, very low fee, and they give you pretty consistent performance over time. So you can see here, I've got here a little graph, and this is just indicating how the stock market, basically, we've got a graph here on US bonds, US shares, Australian bonds. You can see there's cash and consumer price index there. So consumer price index, that basically means here on this graph, we've got 20 years ago we invested $10,000, and that's where it could have ended up if you just invested and left it there. Now, that's not exactly what an index fund will give you, but most index funds are returning somewhere between 6, 7, maybe even 8%. So you sort of pushing toward you're sort of between the Australian bonds and Australian shares. They've got their own fees and management and management costs within those funds. So the net result's a little bit less, but they do perform consistently over time. So if you invested 10K in an investment fund 20 years ago, today it's probably going to be worth maybe $110,000. So and that's nothing's guaranteed, but it's pretty safe. For an index fund to go to nothing, basically the whole stock market has to fall over and all the companies go broke. So I think we can agree that's not going to happen. And if it did, we'd have way greater problems to worry about. It would be Armageddon. The whole planet would be melting down from a financial perspective. I can't ever see that happening. So, and that's what you've really got to think about. Now, going back 15, 20 years ago, over a 5-6 year period, these investments that I was talking about, I invested in some hot tip shares, a few individual companies, some IPOs that, I had a couple that went really well, but I had a few that went to nothing as well. Played around some share trading and seminars, all these things. If I had just been smart with my money and knew what I know now, then and put it into index funds, so I would have had tens of thousands of dollars that I would have invested in index funds back 15 odd years ago. That tens of thousands of dollars would now be worth hundreds of thousands of dollars. Unfortunately, I've lost that opportunity. I don't have that hundreds of thousands of dollars. Now, I don't want you to make that same mistake. Please do not make that same mistake. Okay, so if I just, like I said, hundreds of thousands, and even to look at it a bit differently, I like to invest in property. I'm a keen property investor. If I even took that money invested in property, that money would probably have grown because of leverage that you get through investing in property, particularly here in Australia, probably past $1 million as we talk today. That's $1 million I now don't have. So don't make the same mistake I did. Please, please, absolutely don't. So yeah, that's it from me today. I hope you found that insightful. I hope it gives you some food for thought when you're making some decisions around investing and maybe where you should be investing your money. Like I said, I'm not a financial advisor, so do your own research around investment funds. Have a chat to some professionals that maybe could give you some advice on this. Your super is a great place to ring up. You get some free financial advice in your super if you didn't know that. So ring them up, ask them about that, maybe contact a financial advisor or even have a discussion with your accountant. But there's plenty of information online. Index funds are certainly a great way to go. Boy, the world's greatest investor, or one of the world's greatest investors, Warren Buffett, he even says, if you're an inexperienced investor, where should you start? Index funds, unequivocally. He has stated that. So, there must be something in that, I would think. So, just wrapping up, just look out for anything that's advertising big returns because it's going to have big risk associated with it. Be safe with your money. You want to make sure that you don't invest in stuff where you could end up going to zero because that's just lost opportunity. And worst of all, lost time, which is the biggest painful thing you can do for your investing strategy. I know index funds are probably, it's going to be a bit boring. It's pretty simple, but you know what? It does get your results over a long period of time. So good luck with your investing. Go do some research on that, and don't make the same mistakes I did. Also, I'll put in the notes of this video as well, my website, michaelsgarbossa.com. I've got a free PDF there for you to go and get to have a look at, and it's what I did to go from having no savings to investing in my first investment property. There's the framework of a very simple plan there for novice investors that you can have a look at to start to give you some ideas on how you can put your hard-earned money to good work. So that's it from me today. Yeah, sorry about that. That's it from me today. Have a great week, and I'll see you next time. Thank you very much. Bye.